Bitcoin just got rejected at 76,000 for the third time. And normally that sounds bad, but there's something happening behind the scenes that changes everything. So for weeks, the market has been terrified, like genuinely scared, but today that flipped. The fear index went from extreme fear all the way to greed. And here's why that matters. For the last 46 days straight, traders have been betting that Bitcoin is going to drop. That's the longest streak since 2020, but the price keeps going up anyways. So picture this. You bet that something is going down, but it keeps going up. At some point you have to bail on that bet. And when you bail, you're forced to buy. That pushes the price up even more. It's called a short squeeze, and it's already starting.
We are seeing a historical short squeeze right now. The reason why the S&P 500 traditional markets are pumping so hard is because the institutions that were short heavily in the past, they are starting to unwind their shorts.
Big money that was betting against the market, they're bailing. And every time one of them bails, it pushes the price higher. That's what's fueling this rally. Now the question is, if all these people are being forced to buy, who's been buying this the whole time?
Who is selling? Because we know who's buying. Michael Saylor and Strategy are buying billions. So as somebody, we're still trying to figure out who, but as somebody sells into the grind up, sells into the pump, Michael Saylor is buying those bags.
So Saylor is loading up billions of dollars. While everyone else panics, he's buying everything he can get his hands on. But someone has to be selling to him. And the data shows exactly who it is.
It's the short-term holders, the newbies. Yes, short-term holders remain highly sensitive to price movements. I mean, the charts speak for themselves. Yesterday, as Bitcoin was testing the $75,000 level, it was short-term holders that significantly increased their Bitcoin flows to exchanges.
So the new investors, the people who just bought in, they're the ones dumping 65,000 Bitcoins sent to exchanges in one day. That's people getting ready to sell. And this is the pattern that happens every single time before a big move. The nervous money leaves, the patient money stays. But here's what's really got my attention this week. While regular people are panicking, the big institutions are doing the opposite. And the numbers are insane.
That daily institutional flow is more than double the volume processed by the largest centralized crypto exchange in the United States. Furthermore, global spot ETFs absorbed an astonishing $18 billion in net inflows during the first quarter of 2026 alone.
$18 billion poured into Bitcoin ETFs in the last 3 months. That's not retail, that's banks. That's hedge funds, that's the biggest money in the world quietly stacking while everyone else is scared. So you've got scared people selling, smart money buying, and the biggest short squeeze in years pushing the price up. If you zoom out, none of this is new.
It doesn't matter because if you follow the business cycle chart, you've been bullish on manufacturing, you've been bullish on energy, and you've been bullish on metals. And all of those have been outperforming the stock market this year and Bitcoin.
That's the bigger picture. The cycle still works. Every time people get this scared, every single time, the patient people come out ahead. So yeah, 76,000 got rejected again, but look at what's happening underneath. Subscribe if you want this every day, and I'll see you tomorrow.